Hello everyone, this is Victor here. Welcome to the Intelligent Investor channel. Several subscribers asked me to make a stock analysis video about Coinbase stock. Now, Coinbase initially passed above 100 billion market cap on the first trading day when it went IPO, but now it has dropped substantially to around 52.5 billion market cap at the time of making this video. Many investors ask these questions. Is it time to buy Coinbase stock? What are the risks that we should consider? What is Coinbase long-term growth prospect? And what is Coinbase fair intrinsic value right now? To answer all these questions, I'm going to cover these topics in this video. First, I'm going to talk about Coinbase business model. Then I will talk about what are Coinbase 3 long-term growth catalysts. I will also talk about Coinbase 3 major risks which all consider. Then I will talk about what is Coinbase fair intrinsic value per share, so we will know whether Coinbase is currently overvalued, fairly valued, or undervalued right now. And I'm going to talk about, am I buying Coinbase stock? If you like this video, make sure to smash the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and commentary videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog and become a supporter. You will be able to download the intrinsic value calculator and all the sources I use to analyze each stock. Also, you will see all the stocks I am buying, selling, and holding for the long term. I have provided the link in the video description. Take a look. Let's start. So what is Coinbase business model? Let me show you this here. Coinbase is the largest cryptocurrency exchange in the US. It's also one of the largest crypto exchanges in the world. In Q1, Coinbase has approximately 108 digital assets, up from 90 digital assets at the end of 2020. Bitcoin and Ethereum are the two biggest digital assets or cryptocurrencies. If you look at this here, you can see that Coinbase earns most of its revenues from trading transaction fees. For example, in 2020, 96% of Coinbase net revenues came from cryptocurrency trading transaction fees. The rest revenues came from other revenue sources such as custodial fees, staking revenues, and license revenues. So what are the key revenue drivers for Coinbase? The first key revenue driver is the rising crypto asset price. Coinbase always makes the most revenues when the entire crypto market cap, especially Bitcoin price, is increasing quickly. The second one is the monthly transaction users, MTUs. In Q1 2021, Coinbase had 6.1 million monthly transacting users. Monthly transacting users, MTUs, are the active monthly users who have traded at least once on Coinbase platform each month. In comparison, there were 56 million verified users in Q1. Verified users are the users who have registered on Coinbase platform. This shows Coinbase potential monthly transacting user base. The third key revenue driver is the trading volume. Coinbase had 335 billion. This is very important because Coinbase makes the most revenues, around 90% from trading transaction fees. The next key revenue driver is the assets on platform held by Coinbase. Coinbase had 223 billion, around 11.3% of crypto asset market share in Q1 2021. This is also very important because it shows that many large institutional investors and retail investors are using Coinbase and trust Coinbase platform. In terms of operating margin, let me show this to you here. Coinbase had a 32% operating margin in 2020, which is a very high operating margin. This is mainly because of the enormous price increase in Bitcoin and the entire crypto market. Now let's talk about Coinbase long-term growth catalysts before we talk about Coinbase major risks we should consider. The first long-term growth catalyst is the increasing adoption of cryptocurrencies from both retail and institutional investors. This article is from MarketWatch. Analyst Sean Horgan said crypto has reached an inflection point on its road to legitimacy, and we see this as a long-term disruptive trend that's only in its early innings. The entire crypto market cap is around 2.456 trillion now, dominated by Bitcoin and Ethereum. Right now, Bitcoin has approximately 47.81% market share, and Ethereum has approximately 15.44% market share in the entire crypto market. There are thousands of cryptocurrencies around the world. Right now, there is an increasing adoption of cryptocurrencies, especially Bitcoin and Ethereum. More and more large institutional investors and companies are starting to invest in Bitcoin and other cryptocurrencies. Coinbase management said this: our institutional business is still in its early days, but we are pleased with the strong growth we continue to see, with assets on platform growing to 122 billion in Q1 2021 from 45 billion at the end of 2020. We are seeing a wide variety of institutional clients ranging from hedge funds and corporate treasuries to pension funds and insurance companies, many of whom are entering the asset class for the first time. We think our combination of best-in-class custody, advanced execution tools, and deep exchange liquidity are leading institutional clients to choose Coinbase. Looking ahead, we see the opportunity to provide sub-custody and execution as a growth opportunity. Now, here are some examples. Tesla invested 1.5 billion in Bitcoin earlier this year. Tesla now lets customers to buy Tesla cars using Bitcoin. MicroStrategy now has approximately 4.45 billion worth of Bitcoin. Square has also invested millions in Bitcoin. PayPal lets you buy, hold, and sell Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. Morgan Stanley recently announced they're allowing their high net worth clients to invest in their Bitcoin funds. This is my opinion. I believe the increasing adoption of Bitcoin, Ether, and other cryptocurrencies are the biggest growth catalysts for Coinbase. I think more and more large institutional investors and companies will start investing a portion of their cash they don't need in Bitcoin because the current yields are too low now. I want to show you this revenue breakdown here. In 2020, you can see most of Coinbase trading transaction revenue is coming from retail investors instead of institutional investors. I believe more and more retail investors, especially the younger generation investors who understand blockchain technologies, will continue to invest in cryptos. The second long-term growth catalyst is the increasing number of monthly transacting users as well as the increasing crypto prices. I mentioned this earlier. Higher Bitcoin and cryptocurrency prices always lead to more trading volumes and higher monthly transacting users for Coinbase. The second most important key revenue driver is the monthly transacting users. The third most important revenue driver is the higher trading volume, which leads to higher trading transaction revenue for Coinbase. Historically, Coinbase verified users had been growing steadily each quarter. In Q1 2021, there were 56 million verified users. Verified users show the number of people registered on Coinbase who are interested in using Coinbase platform, but it's not the actual number of active users. It just shows the number of users who are interested in using Coinbase platform to buy and trade cryptocurrencies. The most important metric is the monthly transacting users, which show the number of active users that are actually using Coinbase to buy and sell cryptocurrencies each month. In Q1 2021, there were 6.1 million monthly transacting users. Here's the important point. If you look at this here, you can see Coinbase monthly transacting users highly correlated with the crypto market cap. Historically, high crypto market cap and volatility always led to higher trading volumes and higher monthly transacting users for Coinbase. Right now, Bitcoin and Ether are trading near their peaks. Higher crypto prices always lead to more people trading cryptocurrencies and using Coinbase platform. But the opposite is true. If crypto prices drop substantially, just like in 2018, and have a huge correction, Coinbase revenue will likely drop a lot during the huge market correction because trading volumes and monthly transacting users will be much less. Now, at the time of making this video, the actual Q1 2021 financials are not out yet, but Coinbase management has given us these three possible scenarios for 2021. Under the high scenario, Coinbase should have around 7 million monthly transacting users. If crypto market cap continues to increase with moderate to high crypto asset price volatility, under the normal scenario, there should be around 5.5 million monthly transacting users if crypto market cap remains flat with low to moderate crypto volatility. Under the lower scenario, there should be 4 million monthly transacting users if the crypto market cap decreases significantly and with low levels of crypto asset volatility. This is my opinion. I cannot predict whether the entire crypto market will continue to increase this year or even next year, but eventually there will be a huge market correction like in 2018. But in the long run, as long as Bitcoin, Ethereum, and the entire crypto market cap continue to grow, I believe Coinbase monthly transacting users and trading volumes will continue to grow. I believe the third growth catalyst is the higher inflation rate risk going forward. This is from the Coinbase perspective. For example, over the course of 2020, we observed institutions invest in Bitcoin as a hedge against inflation at an accelerated rate. Right now, interest rates and treasury yields are still extremely low. Investors are always looking for the best asset classes such as stocks, bonds, US treasuries, and real estate to invest their capital to earn the highest returns possible with the minimum amount of risks. Low interest rates also lead investors, including retail and institutional investors, to move their capital to more risky assets such as stocks and real estate. Many people believe that there will be a much higher inflation rate going forward, above the 2% target inflation rate. Now, many investors invest in Bitcoin because Bitcoin is finite with a maximum supply of 21 million. Right now, around 18.5 million Bitcoins are mined. Now, let's talk about the major risk we should all consider. The first major risk is the crypto market correction. Now, cryptocurrencies are very volatile and very speculative. Higher crypto market cap and continuous increase in Bitcoin and Ethereum prices always lead to high revenues, high trading volumes, and higher monthly transacting users for Coinbase. But the opposite is true. If there's a huge market correction in the crypto market, especially a large correction in Bitcoin and Ethereum, we can expect it will greatly impact Coinbase trading volumes, monthly transacting users, trading transaction revenues, and its crypto assets on Coinbase platform. This is from Coinbase perspective. Between December 31st, 2017 and December 31st, 2018, Bitcoin and Ethereum prices fell approximately 74% and 82% respectively, and total crypto asset market cap decreased by 80%. During the same period, our assets on platform decreased by 73%. Coinbase management said this: as a reminder and as detailed in our prospectus, crypto markets have observed 4 major price cycles since 2010, which have typically had durations ranging from 2 to 4 years. On average, these price cycles have increased the overall crypto market capitalization significantly from the prior cycle and attracted new users into the crypto economy. We believe we entered the 4th price cycle in late 2020. We do not know where we are through in the current price cycle, but we can already see that we expect to reach a peak materially higher than the last all-time high. I want to show you these 4 crypto market cycles here represented by Bitcoin. There were 4 major crypto asset price cycles since 2010. According to Coinbase management, we're in the 4th crypto cycle as represented by the Bitcoin price, which is the largest crypto asset in the world. Now, this is my opinion. It will just be a matter of time before we see another huge price correction in the entire crypto market. So when this happens, we can expect Coinbase business to be impacted a lot. Regulatory risk is Coinbase's second biggest risk we should all consider. This is from Coinbase perspective. As crypto assets have growth in both popularity and market size, various US federal, state, and local and foreign government organizations, consumer agencies, and public advocacy groups have been examining the operations of crypto networks, users, and platforms with a focus on how crypto assets can be used to launder the proceeds of illegal activities, fund criminal or terrorist enterprises, and the safety and soundness of platforms and other service providers that hold crypto assets for users. Outside the United States, several jurisdictions have banned so-called initial coin offerings, such as China and South Korea, while Canada, Singapore, Hong Kong have opined that token offerings may constitute securities offerings subject to local securities regulations. There will also be the risk of banning Bitcoin and other cryptocurrencies. You may know this already, cryptocurrencies are illegal or restricted in certain countries in the world. Regulators, including the US SEC, have very little control over the crypto markets and crypto exchange right now. Huge speculations in cryptocurrencies can create huge systematic risk. All of this means that we can expect more regulations on crypto exchange, including Coinbase, going forward. The third major risk is increasing competition. Let me show this to you right here. There are hundreds of crypto exchanges in the world. Coinbase is the largest crypto exchange in the US, but its biggest competitor is Binance. Binance is the largest crypto exchange in the world. Binance is actually much larger than Coinbase. Binance has a much higher trading volume and many more crypto assets to trade than Coinbase. This is my opinion. If I have to choose between Coinbase and Binance, I would choose to use Binance because it is a much more advanced platform to trade cryptocurrencies and because it has many more crypto assets than Coinbase. Another risk I should mention is that crypto exchange is still very new. There will always be the risk of cybersecurity and breach that could impact Coinbase or any other crypto exchange going forward. So what is Coinbase intrinsic value per share? It's very hard to estimate Coinbase fair interest value because its future earnings and cash flow are largely dependent on how much the entire crypto market, especially Bitcoin, will grow in the future. The cryptocurrency market is also very unpredictable. Coinbase CFO said this: our revenue is highly correlated with the price of Bitcoin and crypto asset price volatility. We cannot forecast the price of Bitcoin any better than you can, and as a result, it's very difficult to accurately forecast our revenues. To estimate Coinbase fair interest value, I need to make these key assumptions. First, I define Coinbase intrinsic value as its future earnings or cash flows in its lifetime discounted to the present day. Now, at the time of making this video, Coinbase actual Q1 2021 earnings are not released yet, so I do not have the actual Q1 2021 financials. But management said Q1's net income is approximately 730 million to 800 million. We're assuming Coinbase net income is very close to its free cash flow. We should not use Coinbase operating cash flow to estimate its free cash flow because Coinbase operating cash flow is overstated by its custodial funds due to customers. So for example, in 2020, you can see Coinbase operating cash flow included 2.7 billion custodial funds due to customers. We're assuming Coinbase compound annual growth rate will be approximately 30% to 50% each year for the next 5 years. The discount rate we're using is 11%. This is higher than the 7.5% WACC rate from Finbox.com. I believe Coinbase has a lot of risk, so we're using a higher discount rate. In terms of terminal value, we're using the average of both perpetual growth model and the exit multiple model to estimate Coinbase terminal value at the end of year 5. Let's go through each of these case scenarios. There are 3 case scenarios. The worst case scenario with a compound annual growth rate of 30%, the normal case scenario with a compound annual growth rate of 40%, and the best case scenario with a compound annual growth rate of 50% each year. Under the worst case scenario, we are using a compound annual growth rate of 30%. If we project Coinbase net income to the next 5 years and then discount it to the present day, Coinbase intrinsic value as a whole company should be around 37 billion, compared with its current market cap of 52.52 billion as of May 7, 2021. And if we divide this by the shares outstanding, Coinbase interest value should be around $186 per share compared with its stock price of 263.7 per share as of May 7, 2021. Again, I am assuming Coinbase net income is very close to Coinbase future free cash flow. Under the normal case scenario, we're using a 40% compound annual growth rate each year over the next 5 years. If we project Coinbase net income to the next 5 years and then discount it to the present day, then Coinbase intrinsic value should be around 52 billion compared with its current market cap of 52.53 billion as of May 7, 2021. This is exactly the same. And if we divide Coinbase interest value as a whole company by the shares outstanding, then Coinbase interest value per share should be around $262 per share compared with its current stock price of $263.7 per share as of May 7, 2021. Under the best case scenario, we're using a compound annual growth rate of 50% each year over the next 5 years. If we project Coinbase net income to the next 5 years and discount to the present day, Coinbase interest rate as a whole company should be around 72 billion compared with its current 52.53 billion market cap as of May 7, 2021. If we divide this by the shares outstanding, Coinbase interest value per share should be around $362 per share compared with its current $263.7 per share as of May 7, 2021. If you have to ask me, I believe Coinbase fair interest value should be around 52 billion as a whole company or $262 per share at the time of making this video. So am I buying Coinbase stock? I only bought a very small position in Coinbase stock representing about 0.8% of my portfolio. I bought it when it was at 66 billion market cap. I made a mistake of buying it too early because I did not take the time to analyze Coinbase stock first before buying. If I can choose again, I will wait until Coinbase stock to drop well below its fair interest value, so there will be a greater margin of safety. Personally, I believe Coinbase stock fair interest value is around 52 billion as a whole company or $262 $62 per share, I believe the increased adoption of cryptocurrencies, especially Bitcoin and Ethereum, will continue to benefit Coinbase in the long run. Now, Coinbase business always does very well when the entire market cap price is increasing very quickly, especially Bitcoin and Ethereum. But when there's a large correction in the crypto market similar to what happened in 2018, we can expect that Coinbase business will be impacted the most. Now, it's important to always do your own research and do your extra due diligence. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and commentary videos every week. That will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog and become a supporter. You'll be able to download the intrinsic value calculator and all the sources I use to analyze Coinbase stock. You will also see all the stocks I am buying, selling, and holding for the long term. I have provided the link in the video description. Thank you for watching. This is Victor from the Intelligent Investor channel. I will see you in my next video.